Welcome back, my beautiful friends. You're listening to A Moment of Zen right here on 710 WOR, the voice of New York. I'm your host, Zen Sams. Up next in our Business and Buzz segment, we have a returning contributor, Kyle Wool. And I'm so pleased to announce that Kyle Wool has been promoted to the role of president of Revere Securities. Of course, Kyle is going to continue to guide the private wealth management initiatives with a focus on expanding the business across other areas of the firm. And as per Chairman Bill Moreno, Revere Securities is a leading emerging growth-focused broker-dealer serving many industries globally, thanks in large part to Kyle's leadership, energy, and tenacity. And today, Kyle and I are chatting about how to make great investments despite inflation in 2022. Now, for stock investors pondering how to ride out the worst bout of inflation in 4 decades, don't worry and stay the course is what some of the top wealth managers are saying. Prices that consumers pay for everyday items surged an insane 8.5% in March, the highest level since the early days of the Reagan administration. Inflation is a very tough predicament. It chips away at the real value of investor capital and investments. It could also make future company profits less valuable today and lead to higher interest rates. Now, many experts believe that investors would be better off continually investing over time rather than changing their strategy based on macro pictures. Now, strategists insist that you shouldn't try to time the market because of high inflation or yield curve inversion, as trying to time the market is usually a fool's errand, so to speak. In fact, higher than usual inflation doesn't have a material impact on equity returns. The median inflation adjusted return of US stocks over the 2 years following periods of high inflation was nearly identical to the 2-year return after periods of lower inflation, 18.5 versus 18.7 respectively. Still, soaring price pressures have become a top of mind concern for many notable investors on Wall Street. And here to chat some more and break it all down is President of Revere Securities, Mr. Kyle Wool. Welcome back, superstar.
Thank you, Zen. We're happy to be here.
So nice to have you back, Kyle. So the last time you were on was about a month ago, and a lot has happened. Revere has come a very long way, and you are now president, so congratulations.
Thank you.
So let's dive right into this. Investing is an effective way to fight back against inflation, and active investments can help offset inflation to preserve and grow wealth. Talk to me more about this notion and the driving factors behind you pulling the trigger on investments.
Yeah, I think inflation is definitely the topic that everyone's talking about right now. And history is no idea of future performance, but I do think we can learn a lot from our history. And if you look at the major inflationary times of the early 1980s and other periods that we had rampant inflation in the economy, I would agree with you. The average investor who most of the IRA or 401k, they should just invest for the long term, and they should not be trying to time the market. But at the same time, for people that are going to be pay attention to what's going on in the market, it's a time to maybe do some. You still want to stay invested in the market, but you may want to look at asset classes that have done very well in inflationary environments. For example, real estate has done very well historically in an inflationary time. If you look at the mortgage rate, everyone's talking about the 10-year yield almost at 3%, and mortgages up to 5%. But compared to the inflation right now in the United States running at 8.5%, it's still doing quite better than the average inflationary pressures that are in the economy. There's other assets that traditionally have done quite well. Real estate investment trusts, commodities, utilities, things of that nature will typically hold up a little bit better than they will than other assets will that are more focused on dividend growth and yield growth.
Yeah, without a doubt. I mean, look, if you actually think of it, for instance, right, this is a great example. From January 1926, Kyle, to the end of the year 2020, $1 would have needed to grow to $15 to keep up with inflation. So if you had invested $1 in long-term US Treasury bonds in 1926, it would have grown to $200. That's 13 times greater than inflation by the end of the year 2020. And further, if you had invested $1 in a broad basket of US stocks in 1926, it would have grown to approximate $10,000. That's 729 times greater than inflation over that same period. So what you're saying speaks into a bigger picture. All right, so this leads me directly into the second question. Now, a disciplined investor can plan for inflation by cultivating asset classes that outperform the market during inflationary climates. Now, although traditional bonds are the usual go-to for the income-oriented, they aren't the only investment that produces a revenue stream. Talk to me about your top asset classes to consider when seeking protection from inflation.
Okay, so you're exactly correct. When you think of fixed income and traditional bonds, you would want to avoid those during an interest rate environment where interest rates are rising like they are right now. However, there are certain fixed income investments that will do very well. Now, TIPS, TIPS, or Treasury Inflation Protected Securities, they are designed for this specific moment in history to perform quite well. So I would recommend those if that makes sense for your risk tolerance in your portfolio. Bonds, which used to be called junk bonds, they call them high yield bonds now, also will perform quite well. And if someone is chasing yield, I would stay away from high dividend paying stocks because they will typically get hit just like traditional bonds will. But you might want to look into real estate investment trusts, which can pay 7, 8, 9%. You might want to look into a master limited partnership, which is a pipeline company, which can pay anywhere from 8 to 12%. And because those are based on commodities actually running through their pipelines, like liquid natural gas, those will also perform quite well. So, like I said earlier, in times like this, it's about readjusting your portfolio, not walking away from your portfolio.
Yeah, and it's interesting you said tips because that seems to be a really good blanket because, like you said, they're a type of US Treasury bond really designed to increase in value in order to keep pace with inflation. And I think really the bottom line is because they're backed by the US federal government, they're considered among really the safest investments essentially in the world. Leading me into something I've always wanted to kind of cover, but what about bank loans? I mean, some businesses can thrive during inflation, right? When prices are rising, and banks, for example, earn more money as interest rates rise and profit off the increased price of loans. So, what about buying senior secured bank loans? What's your opinion on that?
Yes, for the right investor, that's a very good investment to be in right now. And again, the key word that you said is senior secured bank loans. There are a variety of different kind of bank loans out there. There's also funds that you can buy that focus on secured bank loans and also what we call floating rate securities. Now, what a floating rate security is, they're typically bond funds or ETFs that will do better as interest rates go up and they readjust every 90 days. And those are typically made up of senior debt.
Interesting. When you say exchange traded funds, right, and mutual funds, really, those are two of the easiest options to diversify investments into international markets. Really, these types of funds are a low cost way to invest compared to purchasing a portfolio of ADRs or foreign stocks, so to speak. So, yeah, it makes total sense.
Yeah, and Zen, and I would say one thing too to all of our investors. When you're talking about fixed income, I would highly recommend looking at five-star mutual fund or an ETF that has very good ratings from Morningstar. And unless you're a highly sophisticated fixed income trader, I would recommend staying away from individual bonds.
Yeah, that makes total sense. And then when you talk about some of the asset classes to consider, right? When you talk about relocating money into stocks, with the notion that if inflation returns, it's generally a punch in the jaw for the bond market, but it could be a shot in the arm for the stock market. So, a lot of experts would say consider reallocating a percentage of your portfolio from bonds to equities in order to take advantage of this possible trend. What do you say to this?
Well, I think when it comes to equities, I do think equities will always outperform over the long term. But now is the time when you want to move away from your large cap dividend paying stocks. And if you look historically at periods like this, normally after you've had such a strong large cap performance over the last 3 to 5 years, and you have inflation going up, the sector of the market that will outperform over the next 3 years will be your small caps and your mid caps. Now, again, they're going to have more volatility, so you have to understand that. But most of the small cap companies, 90 to 95% of the revenues are derived internally within inside of the United States. So if you're worried about the US dollar versus other currencies, if you're worried about what's going on in Europe right now or what's going on in Asia, and you want an investment that probably will outperform the S&P 500 over the next 3 to 5 years, you may want to look at a small cap mutual fund manager, an ETF, which is based on the Russell 2000, which is the 2000 largest companies in the small cap index.
Yeah. Very good point. And there are several major economies in the world, like you just mentioned, that don't rise and fall in tandem with the U.S. markets, with the U.S. market, indices such as Italy, Australia, and South Korea kind of seem to be very much on their own. Now, we have about 4 minutes left, but I want to cover something that a lot of listeners are emailing me about. So about Bitcoin, of course. Now they're asking, is Bitcoin a strong hedge against inflation? So to kind of wheel it back a little bit, theoretically, Bitcoin could be a strong inflation hedge, right? Assets that investors run to in times of rising prices, so-called safe haven investments like precious metals and real estate, are ones that are scarce or move counter to paper money or financial assets. Bitcoin kind of fits the bill. But I know you're not a big fan. So what do you say to this?
Theoretically, gold, right? Now, gold you can trade in many different ways. You can buy a physical bullion, but then you're gonna have to pay to store it, which people don't normally explain to you. Or you can buy probably the most liquid gold ETF in the world, which is GLD, which is State Street Spiders. You can go out and buy gold miners. There's many different ways to buy gold. Now, Bitcoin theoretically should be a great hedge to the US dollar. Now, theoretically, because we've yet to determine how cryptos will be taxed. And until we really understand how cryptos are really going to be taxed and regulated by the SEC and FINRA and the Department of Justice, it's hard for me to say that Bitcoin's a great hedge to the US dollar.
True, very true. Because, and to your point, the problem is Bitcoin hasn't much of an investment history, right? It was created in 2009. It's only been actively traded for a decade or so, and inflation hasn't been much of a factor for most of its short life. So no one really knows how inflation is going to affect Bitcoin and its characteristically volatile behavior, and certainly its performance has been puzzling. Via the inflation of late, so to speak, because Bitcoin doubled from mid-December 2020 to early January 2021 as inflation started to heat up. But then, with no apparent sign of easing inflation pressures between January 8 and January 11, it lost like 30% of its value. So yeah, I mean, it's a toss-up.
It was specifically created for this moment, though. So if Bitcoin's ever going to truly perform, it should perform best now.
Yeah, that's very true. So listen, guys, tip from Kyle Wool, president at Revere Securities. He's definitely on front of the curve and on his A game when it comes to giving advice. But we're almost at the end of our segment, Kyle, and it was really such a pleasure to have you on.
Anytime, Zen. I'm always happy to talk, and I think one of the reasons I really enjoy coming on here. It's not obviously I enjoy talking to you, Zen, but to be able to give some advice to the average investor, the people that really aren't reading the Wall Street Journal every single day, the people that aren't just following the Quotron on CNBC or Fox Business, it's important for them to understand. Don't get nervous just because you heard the word inflation. Understand what it is. Understand you don't need to sell all your stocks and all your bonds, but maybe make some adjustments. Maybe move out of your 10-year treasuries into tips. Maybe get out of your large cap dividend paying stocks and move into something like a real estate investment trust or master limited partnership. You don't have to get out of the market, but it's important to know what's performed best in historical times during inflation.
You said it. Kyle, love you so much. Thank you for coming on.
Thank you, Zen.
Guys, that was Kyle Wool. Check him out, president at Revere Securities. Go on their website, reveresecurities.com. And listen, the bottom line, inflation happens and is a risk every investor faces. Money tends to lose value over time, and also the level of inflation in an economy changes depending on current events. There are, however, many ways for investors to hedge against inflation, including some investments and inflation hedged asset classes designed specifically for that purpose, like Kyle walked us through. And keeping these assets on your watch list and acquiring them when inflation hits can definitely help your portfolio thrive despite this economic climate. Guys, that was our business and buzz segment brought to you by Revere Securities. You're listening to A Moment of Zen right here on 710 WOR, the voice of New York.